world of finance is stunned by the storm called GameStop.
Short interest in GameStop.
This GameStop situation is the craziest I think I've ever seen.
We have some breaking news right now on what has turned into the soap opera and saga of the markets right now, and that is the story of GameStop.
Financial experts are calling it the end of the Wall Street as we know today. The others are calling it looming bloodbath for unexperienced investors. For some people in the game, this is new chapter in science of finance and mathematics, and for the others is long-awaited revolution in a world of investing. But who is really right here, and what will really happen in the future? If you're not familiar with the biggest conundrum of 2021, here is the quick update. The stock of the company GameStop was trading somewhere around $3 in February 2020. A pandemic closure of the physical stores made video game enthusiasts to purchase games online, pushing investors to believe that GameStop, company that has physical stores, will end up like Blockbuster, killed by digital competitors. But in the beginning of 2021, millions of retail investors gathered around the subreddit forum called Wallstreetbets, decided that it's perfect opportunity to make a surprise rush on uncharted territory. They aggressively started buying stocks of the company that was doomed for bankruptcy, elevating its price to unbelievable heights. As I'm recording this video, the stock is trading for a whopping $347, which made anyone who invested $1,000 1 year prior around $115,000 today. Seems too good to be true? It is.
So, Andrew, the people are crushing the establishment. It must be time to change the rules, right?
And we are going to play a little bit Monopoly today. Not the way you think, we're going to switch up the game a little bit. And before I go into a really long explanation what really happened in this really big news and why big investors and hedge funds might lose billions if not trillions of dollars, let me explain you why you should really trust me. My name is Vladislav Radak. I'm a writer and mathematician, and when I'm not recording these videos, when I'm not talking alone to the camera, I'm usually at a university teaching financial mathematics to young bright minds of the future, and when I'm not really doing that, I'm writing novels. Before this, I worked for big consultancies all over the globe, consulting financial companies. So I was, let's say, on both sides of this spectrum. I am a small investor myself, and I invest daily on the stock market. On the other side, I was consulting big banks how to lower their risks and how to invest their money safe. I was playing with the suits, this is why I'm wearing this honorary white shirt today, but I also understand small investors who lack a little bit of knowledge, like some of my bachelor students. Needless to say, I don't own any GameStop stocks or AMC stocks or anything similar for that matter, so I don't have dog in a race. Now, let me cover some basics of finance and the stock market. In traditional environment, when one company is performing good and has a growing product or a service, legacy investors will buy stock of that company, creating demand, and the stock will rise. But big investors realized they can play much complex games and that sometimes company doesn't even need to be good. With their massive capital, they were sometimes creating the hype and therefore demand and squeezing the profits, not caring about performance of the company and its fundamental factors, hurting a lot of small players and working class in the middle. Big traditional investors have all of the resources available. News get faster to them. They have detailed statistics via expensive Bloomberg terminals, thousands of highly educated employees, and very often insider information directly from the companies. Now, with world connected by the internet, tables are turned. Millions of small investors with no knowledge or any resource gathered together on Reddit called Wallstreetbets. Around 10 million people to be exact. They discovered that now they have buying power to drive the market, and fueled by the meme culture, they can make any stock go viral. And together they decided to pour billions of their own money into forgotten stock called GameStop. But there is a twist. If the company is not performing well and small retail investors want to cash in their wins, they need to eventually sell the stock, and that will cause panic and subsequent crash. This is what big sharks of the Wall Street were waiting for. they expected an easy win using short sell. What is short sell, you're asking me? Let's play a little bit Monopoly. So let's say there is stock of one company that you expect will not perform really well, and this stock will actually go down. If you want to earn money on this bet, you're actually going to perform short sell. What is short sell? You're going to borrow this stock of your broker or anybody else, and you're going to sell it on the market immediately. If the price of this stock is $10 at the moment, you're going to get $10 that you're seeing here, but you're going to own this stock to whoever you borrowed it from. Okay? After a couple of days, this stock went down and it's actually worth $7. So now you're going to go on the market, you're going to buy this stock back using the money that you already have, but you're going to pay $7 from it. So it's going to go to this guy and you're going to get your stock back. You're going to give this stock to whoever you borrowed it from, and you're going to end up with $3. That means that you actually earned $3 from this transaction. And this is great. But there is one big downside to the short sell. You see, if you expect that one company will go up, if you buy this stock, let's say for example for $3, and if in the couple of days this company is worth $5, you earned $2, okay? That's pretty simple. But if the stock goes down, let's say now it's free, and then after a couple of days it's like only $1, that means that you lost $2. If the company goes bankrupt and this stock is worth nothing, you're going to lose everything what you invested, in this case $3. So maximum of your loss is actually the amount of money you invested in this transaction. But when you do short sell, there's basically infinite amount of money that you can technically lose. Because if the company goes down, you can earn money, but if the stock goes up and it goes up higher and higher, you need to cover those losses. So if it goes, for example, from $3 to $6, now you actually need $6 to buy the stock back and to return it to whoever you borrowed it from. But the stock can go up and up and up, and basically there is no limit how high this stock can go. If you're losing too much money at some point, you need to call it quits on this game and to cover your losses. At some point you need to go to a big bank and to actually borrow some money in order to cover the losses that you made expecting that one company will go down, but this company actually performed really well and went up. This is why hedge funds Citadel and Point72 infused nearly $3 billion into Melvin Capital, who needed a bailout, citing loss, since they cannot follow the game any longer. When big short sell investors are not able to follow on their bet, they need to call it quits. And they need to close all their positions because they are afraid that the chance of stock getting even higher is really big, and therefore they're going to lose even more money. And mathematically, the amount of money that they can lose is infinite. This is why they need to close their bets. So when they borrowed stock before and they actually sold it, now they need to reverse this transaction and to actually buy it back. This creates even bigger push on the stock market of the buy trades, which pushes the stock even higher. This is called short squeeze, which might mean that small investors are winning. Soon, this became an open battle between small investors and big hedge funds. The thing is that most of the small investors are doing it for the thrill of the game, wanting to draw blood from the suits on Wall Street, risking most of their savings in the process. On the other side, hedge fund managers are risking clients' bucks. Established investors were still betting that the company's sky-high price would eventually collapse, ignoring earlier losses and using any stock borrows that became available to initiate new short positions in hopes of eventual pullback from this stratospheric stock price move. This is the full-blown revolution where both sides are ready to risk their first-line troops to win the war. History says that small retail trading groups would get crushed by hedge funds and savvy short sellers. What happened with the GameStop stock is a reminder how times are changing. Many players are caught in a crossfire. New York Stock Exchange halted the trade of GameStop stock more than a dozen times. Many retailer brokers are refusing to trade its stock, turning their back on the small investor clients. But for a lot of common spectators, this is a fight of a common man. Why is that? Give me a second. I need to do something. Now this feels much better. So how this can turn out to be good? Well, there are a couple of aspects to every story. First of all, a lot of small Redditor users who gained a lot of money during this saw the benefits and their lives changed. Some of them, they paid off their student debts, some of them lost their jobs through their pandemic, and finally they're able to finance their livelihood. And a couple of them even stated they were able to pay health insurance for their loved ones. One Redditor saying that $100,000 that he earned through this crazy transaction will help him pay his sister's kidney operation. The second aspect is maybe giving opportunity to the company GameStop to actually turn its business around and maybe make itself profitable again. You see the power of this company rose significantly. Now this company is worth something crazy like $20 billion, and that means that even owners of the company are getting some more cash in their bank. For example, they can push really hard into digital retail, online sales, or even acquire a smaller company that can help them grow again. On the other side, there's a looming problem over small investors that can really fire back heavily and make a lot of people lose all of their savings. You see, GameStop is now like a sinking ship with many holes that are appearing everywhere. And small investors are basically like guys who are trying to stop the water coming in with their own small hands, in this case, small amounts of money. And they're calling a lot of other small investors to invest their money and to basically keep this ship afloat. And only time can tell if this ship can really sink or swim. And if not, this can easily turn into certain kind of Ponzi scheme. You see, like the small investors who joined this battle at the very beginning, who are still keeping their positions, they eventually need to cash in on their wins, which means they need to take the hands off the holes and leave the ship. When a couple of people do that, the ship will eventually start sinking and this stock can crash. Eventually, somebody will need to pay for this mess. Either hedge funds need to be much more cautious when they wish to earn big bucks praying that some company will fail, because there might be an angry mob of meme-loving nerds on the other side beg to differ. Or a lot of latecomers to the Reddit party will lose their life savings. And now this is the time where we actually need to talk about classical literature, because you see, in everyday problems that we're facing, there's probably some book deep down into a library where you can actually find true answers to the problems that we're facing on an everyday basis. You see, a lot of students are asking me after the lectures, do I have any tips for them how to get rich? And I ask them this: do you really want to be rich and get your lifestyle on a certain level, or you're actually greedy, like I guess both of the players in this very complex GameStop game? Instead of giving them tips, I advise them to read a book, because there is nothing more richful than knowledge. And there are a lot of famous novels deep down into library that can perfectly explain this situation that we're facing right now in this complex game. But one really stands out: the famous Russian novelist Fyodor Dostoevsky in his novel The Brothers Karamazov. The world says you have needs, satisfy them. You have as much right as the rich and the mighty. Don't hesitate to satisfy your needs. Indeed, expand your needs and demand more. This is the worldly doctrine of today, and they believe This is freedom. The result for the rich is isolation and suicide, for the poor, envy and murder. After this, Wall Street will never be the same. Ironically enough, the tagline of the GameStop company is "Power to the players." And only time can tell who really played who. Hey, if you like this episode of Fabric of Life, give us a like and subscribe to this channel. Every week we are taking you on new adventures. Next week I will show you how chaos in your room can be explained by science. Until then, stay tuned and curious, and don't forget, libraries still exist.